Hey everybody, hey traders, Chris Pulver here. Welcome back to the Pulver Report. This is a video for the weekly outlook. The week is June 19th through the 23rd. Markets are closed today. U.S. equities markets closed for Juneteenth. Forex market is open. Just finished up a class with my Equities On Demand trading room just to get ready for the week. Take a look at a handful of stocks we're going to kind of prep for once the market returns live on Tuesday. But want to do a weekly outlook, cover the dollar, oil, gold, silver, Bitcoin, Ethereum, take a look at some stocks, currencies, all that good stuff. So let's get started. First things first, we understand is risk in trading. Please don't always use trade capital only. Do not trade with money you can afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the deal. Follow me on social media. Make sure it's me. YouTube.com/Chris Pulver. Videos like this, live sessions, trading 101 video series, indicators, support resistance, whatever. Check it out. YouTube.com/Chris Pulver. Lots of videos on the playlist. And if you have any comments and ask for any other videos, I'm happy to oblige and do some additional content for you. Let's get into the charts. So I was just looking at where we're at for the SPY. We're sitting at 439. You know, the Qs, this is an interesting technical setup. So the daily time frame here, just like we had back in the top of 2021, right there. Right at the very tippy top of early 2022 or late 2021, a lot of stocks topped. You can see that little red line. That is a measurement of divergence and overbought conditions. We have the same thing happening again. Now, that doesn't mean that I'm calling the top, okay? This could certainly melt up here, you know, go one more time, have another print, and then we start to fill. But what it made me think about technically is I think a correction is coming sooner than later, okay? Now you can see here that a correction, you know, high to low, lower high, and then we push down. I could see this turning into more of a correction and then buy the dip. So if we come back in this yellow zone, I'm still interested in bullish opportunities on the Qs for the year. You know, I think that we talked about this the last couple of weeks. I've really been focused on this in all of my trading rooms. You know, the pain trade for investors this year is missing out. That is the pain trade. And that pain trade would be the market continues to run higher. And everyone's like, I told you, right? As far as the melt up, as far as the tech, as far as AI, all the hype, it doesn't make any sense that, you know, 5 stocks are essentially bringing the entire market cap weighted ETF higher by 30 to 40%. But that is the reality. That's what market cap weighted does. If you still look at the equal weighted, you know, the QQQE is up around 18% versus the Qs are up 40 plus percent or high 30s. You take a look at the SPY versus the RSP, which is equal weighted S&P. You know, we're talking 8 to 9% on equal weighted and 17, 18% or 15, 16% for SPY. So there's still a lot of catch up to be made by companies that haven't had the initial run from the lows in October and the run up this year. So that means there's still opportunity. I still think this tech run has legs. I still think that the market cap weighted stocks will continue to perform well. If they pause, which is a good logical explanation here. I mean, Apple essentially pausing. Take a look at this daily time frame. Same things we had back here to the highs. Overbought conditions, right? Could I see Apple pulling back? Yes, and that would be the rotation into other tech companies that are positioned for AI, right? I mean, I'm telling you, like all the transcripts and all the earnings calls and all the hype is going to be what companies are jumping into the AI bandwagon. You know, and right now, I mean, Apple hasn't really said much about AI. You know, they just continue to crush sales and make a ton of money. But you know, it's a leading technology company. It's, I mean, if Warren Buffett has 20 to 25% of his entire Berkshire portfolio in it, it's fine. You know, plus they do buybacks like crazy. They're sitting on a ton of cash. It's probably one of the most flush companies in the world. But anyway, does it pause a little bit and have a pullback? Sure. If it doesn't and it melts up, it's probably dragging everything with it. So I don't want to fight, okay? The SPY has room to continue to go up. You know, we had a head and shoulders pattern if you look at it right here. If this is a neckline, okay? If this is a low to high and this is a neckline break, we've already hit symmetry right there. We've already hit symmetry. If this is a break to the neckline and we drag this, so I'm going to measure this, make this a little bit thicker. So if I go low to high, and I break this up, that puts us right up towards this 470 handle on the SPY. Again, that's an incredible run higher. I am very curious if a run to 470, use a line here, if a run to 470 hitting the same area here, does this mean like, oh, you got to short it? I mean, technically it would equate to a correction, and we could have a multi-year range that nobody even knows about right now. Right? But that still means that any dips I'm interested in buying. I'm hoping that we get some dips because it sucks to buy a 440 by four or sell a 440, buy a 439, and just have this thing go higher and higher and higher and higher and feel like, well, I'm glad I got paid by buying literally at the top. That's a terrible feeling. So if there's any dips, I mean, especially going into a couple weeks of trading still left in July, we get into or June rather, we get into July trading where the Fed's going to raise rates potentially another 25 basis points. I think a dip would be great, but a dip to me looks like a buying opportunity when you connect the dots like that. We pull back to past resistance. We pull back to previous breakout levels. We come back and accumulate a little bit more in this area here where the market has run up, pulled back, run up, pull back, run up, pull back. Hopefully we have another pullback. And if we look at a wave cycle, wave 1, wave 2, wave 3, this could be a tiny little wave 4 pullback. And then wave 5 is what takes us up to that 470 or higher. So for the Q3, Q4 outlook for me, I'm still looking to buy the SPY. I'm still looking to be bullish in the market. I think directionally that's the way we play it. So Qs, I'd like to see a dip. I've got some big pockets and inefficiencies. I'd like this one to be a little bit more volatile. A pullback would be fantastic. This trend line is very sharp. Previous resistance becoming support. Let's find a couple of efficiencies here around 350 to 340. From there, looking to buy. If this is another wave cycle, wave 1, wave 2, wave 3, a pullback wave 4 would be much needed, and then a wave 5 to get us back up towards these highs. So any dips I'm looking to buy, and it's tough to justify buying highs, so I'm not going to, but I also don't want to sit here and say I'm going to sell it, I'm going to sell it, I'm going to sell it. I've taken some losses, right? I mean, I've taken some bear call spreads. Like last week, I took a loss. I did a 350 by 351. I collected 70 cents on that trade. I lost 30 cents. But I'm also up in a bunch of positions with credit spreads. Last week, Equities on Demand, we finished up, I think, on 17. We had 23 or 24 positions in total. And of those, we had 17 winners out of like 23 or 24 positions. So, I mean, we're doing just fine. We had plenty of income generated. We've got staggered credit spreads for everything going. We have some ownership of shares that are doing really well. And we're just going to continue to ride those profits and manage. So I think at this point, I'm kind of, maybe looking at some in the money bear calls, in the money bull puts, give the market some time and melt up and have very low risk on the indices or the ETFs. If I could collect, 70 cents here if I'm right, collect 70 cents here if I'm right. If I lose on this one but win on this one, I still make 40 cents net. I'm happy with that. Generate some income and not have to be, super picky and perfect on the tops or bottoms for that matter. Okay. But that's the overall ETFs. Let's take a look at the dollar. The dollar has been dropping much harder than I thought. I thought we were in a pretty good space for the dollar to gain, especially going into maybe a bit of a correction, but the dollar's been falling with the market rallying. And that has been a really strong correlation. So it's not a surprise that as the SPY's gone higher, the Q's gone higher, the Dow's gone higher, the Russell's gone higher, that the dollar has been dropping. Now, again, does this turn? Let's take all these arrows here. Let's turn these down for a correction. Does that give the dollar a little bit of a bid? Maybe it does. I still think the dollar index heads up here towards 105 or 106. From there, I'm medium-term bearish on the dollar. But I'm not getting bearish now. I think that right now the dollar, this high, this could be horizontal, okay? And we could be just coming back into a deeper pullback and then head up here. But this 105, 106 zone, I think the dollar makes its way here on a little bit of risk-off flow. If the Fed's going to raise rates again, maybe that kind of slaps the market in the mouth just for a little bit to cause some pullbacks and dips. So I will be watching that. That rate decision is expected sometime in July. If I go to the CME Watch tool right here, I think it's in the middle of July. Nope, end of July, July 26th. And so that will give us another round of inflation data. We'll have the CPI most likely already printed. We'll have the PCE potentially printed. We'll have unemployment claims as well as non-farm payroll. So there's going to be a lot of data that maybe shifts this a little bit. But 74% is already baked in for another rate hike coming from the Fed. So June was just an odd, hawkish pause is essentially what it's being termed. They raised rates again in July. They're sticking to that 2% inflation. They're very firm on the language that no Fed member wants to cut this year. Any cuts could be out to 2024, right? So again, if the market takes it in stride, I think a rate hike creates the room for a pullback for us. Whether that gets priced in ahead of time or not, we'll see. But I'm still interested in buying dips and having, 2023 initially started off as just it's going to be a year of uncertainty. Who knows? The Fed's still tightening, but it's been a year of the melt up. It's been a year of AI hype. It's been a year of mega cap dragging everything with it, and equal weighted sluggishly, kind of going along with it, but just obviously not participating the same way. So 2023 has been kind of a surprise upside led by very few stocks. If you look at any of these sectors right here, I looked at the Spider ETFs this morning. Communication services technology, literally led by 3 to 5 companies. Your Apples, your Googles, your Nvidias, your Microsofts, your Metas, right? That's what's dragging everything up higher, and the catch-up trade is still there. So, like I said, any dips I'm still looking to buy, but it would make sense to me that if we're going to have dips in the stock market, that the dollar gets bid, heads up to 105, 106. From there, I'm looking to short the dollar. Okay, but I'm still going to stay with that for right now. The Japanese yen last week, Bank of Japan came out with a similar stance, still negative interest rates at negative 0.1%. The Japanese yen got just pummeled, and we have new highs on pretty much everything. So I keep telling traders, stay with alignments. Don't fight the Bank of Japan. Don't trade bearish unless you see it confirming. Just wait. And when the JPY eventually turns the corner, there's probably thousands of pips for grabs, right? But if it doesn't turn the corner, it just stays bullish. So don't call the top. That was a hard lesson for a lot of traders last year. Let's go oil. Oil trading at 71.72. Strong support here at 65. I still like buying low. Actually, I might look at. I was looking at some strangles here with some option trades on USO. It just didn't pay very well, even though I think it's a safe trade. I just don't want to have a bear call spread here, bull put spread here. I don't want to run the risk of assignment. And if I can't collect a decent premium, being out of the money on both, I know the probability of profit is high, but I don't want to if I have to risk let's say 80 cents for a gain of 20 cents, I still hate that trade. I mean, if it was like I'm risking 40 cents and or risking like even 60 cents, I'd be happier taking that trade with the high probability, but the premiums are just not great. So I'm just sitting on the sidelines. If oil comes back and retests lows, I'm going to look at some long calls and some credit spreads on USO. And that's it on that one. But we're just really sideways and really choppy. Supply and demand will ultimately, be what decides whether this goes up to $90 and hits the yearly pivot or drops to fresh lows and maybe we see oil settle into the 50s. We'll find out. Gold and silver. Gold is choppy at 1950. If the dollar catches bid, gold's going to drop a little bit lower. Wouldn't surprise me to see gold settle back into 1850 or lower. If gold settles all the way back down here, absolutely a great buy spot in my opinion. 17 to 1650, really love gold there. Silver, I still like silver better technically than gold. I think there's more upside potential. Good bullish channel, good structure on this one. Still has room to go to the downside towards 22 or 2150, but I'm still long on silver towards 29 to 30. If this is a corrective wave, if this is wave 1, all this is corrective. Okay. If we have a wave 3, you can see I've already measured it. Then we have a wave 4, perfect technical resistance becomes support. Wave 5, we're talking silver. Again, this obviously takes time and I could be wrong here, but if this is a 5-wave move, we could be talking silver between $40 and $45. And I think that price point is valid. I just don't know how long it's going to take, but I am positioned for that where I own SLV. I'm owning, silver. I'm bullish on silver and, I'd be happy at 29 or 30 bucks. I'd be thrilled at 35 and I would be, over the moon at, 40 to 45. So I think it's worth positioning, using options to lower the cost basis, trading credit spreads, being aggressive, and just maintaining some positions and exposure on silver. Bitcoin, we're dealing with. So BlackRock came out last week and had some big news. I think it was on Friday. BlackRock steps up and they're talking about putting out a Bitcoin-based ETF, which goes along to compete with Grayscale. Bitcoin's still, really good opportunity if it comes back to tap 20K. This could be just a slow correction and a burn. We'll find out what that does. But anything above 31K, we're talking run up. Anything that just slowly melts back down to 20, I'm looking at buying opportunities there. Ethereum is around 1.2K if I'm going to buy it. Ethereum is right here, 1720. I think if we break this low and get some open space, Ethereum has room to drop towards 1200. So I like these levels here. Ethereum to the upside again. If we traded the range, just looking at a percentage, if we get filled to the lows around 1200 and this thing runs back up, that's an 80% upside. I mean, I don't care if I put in $1,000 and I make 800 bucks. That's a great trade. So not too shabby. I'll certainly be watching those levels closely. And I guess I'll set a chart alarm. It must have expired on me. So I'll put one at around 1200. That's a good spot to pick up some Bitcoin or Ethereum. And the way I'm trading this, it's not just, my off-grid ledger. It's not just, Coinbase stuff. It's also BITO. This is a ProShares ETF that tracks. We're at 1478. I've got some option trades. If we come back down to these lows, $12 or lower, I'm looking at, again, options. I'm looking at credit spreads. I'm looking at long calls. I'm looking at owning some shares and have this thing kind of spot trade along with Bitcoin. So if you're not comfortable, taking it off the grid and doing all the fancy stuff, then you can have some exposure with some of these Bitcoin-based ETFs that track it. Okay. So right now, Grayscale is the same thing. That's GBTC. And this, is that right? That's a big jump today or on Friday. That's interesting. Huh. I feel like this had maybe a nod because of Blackstone. Determine crypto's future, Barron's. Yeah, with Blackstone putting its hat in the ring, that's a pretty big bump for really the world's largest asset manager. And I think they're doing it because just in case they want to be kind of in the arena, as opposed to maybe it's not going to work out, but at least if it does, then Blackstone's involved. So that covers some equities, some options. Let's get into some currencies. Let's go in order. Aussie CAD, I still like bullish. I'm just going to talk directions here. Aussie Swiss, I still like bullish. Aussie Yen, follow alignments. We had a deep pullback on Friday. We're running right up into these equal highs. I think a big level to watch here on Aussie Yen is parity. Okay, so if we have any dips or pullbacks, I would still be looking to stay long. If we hit 100 and we start to see some, overbought conditions, a rising wedge, I think that this is possible. Okay, but like I keep telling traders this year, don't fight it. If you see confirmation, then you trade it. If you don't, just focus on staying short the yen. Aussie New Zealand, I'm looking for a chance to sell this. We got a nice little trade last week on a third pivot. That was an easy 60 pips. Really happy we took the trade in the short term. If this thing stalls here, this could be a nice summer range trade where we get a little confirmation, stop loss above, take this back down to range lows, 1.06. So if that would be a good trade to look for in the flex trading room this week. Aussie dollar, we broke the highs. I don't know. I'm not really convinced. We could have a pause here and the dollar gets weaker, but I think we end up pulling back down. I'm not convinced that the dollar is doomsday yet. So I think that we probably end up pulling back deeper, making this a little bit noisier. Maybe this becomes a broadening pattern, which is a really tricky one to trade because most traders like, there's my breakout, and they start to buy and it comes all the way back down. So that might be the play in Aussie dollar, which means I'm not looking long. If I see some short-term confirmation bearish, I might take a short on it this week, but nothing yet. CAD Swiss, I'm staying long. If we break higher, great. CAD Yen, stay with your alignments. Swiss Yen, stay with your alignments. This one's going to start getting some overbought conditions. If we break this trend line, I'm certainly looking to be bearish if I can confirm it. Euro Aussie short-term, a pullback is expected. Euro CAD, we took profit. Euro Swiss, we're still looking to build low. It's working off those lows a little bit. We're up about 90 pips off that 97 support. Euro Pound, leave it alone. Euro Yen still going higher. Wow, that was a big move. 150 to 155. Wow, what a big move last week. Euro New Zealand, staying out of that one. Euro Dollar, we closed out for profit around the 107, 106.50 area. Now I'm going to wait. I think, again, coming up into this structure here, we could have another push to the downside coming if the dollar gets stronger. If it comes back up to the highs, that might be a bull trap, and we still stay range bound. Remember, it's summer trading. June, July, August. Typically, we see some summer trading tops and bottoms in September, August, September. So I'm not calling big directions here. I think this makes sense for some structure. We could hit the highs again, then drop. That'd be a pretty good trade. We could start falling from here. So we'll assess that one this week in the flex room. Pound crosses. Pound Aussie, no trade. Pound CAD. What did we do on Pound CAD? I got stopped out here. I was looking for a sell trade back down towards the pivot. Euro CAD was dropping nicely. Pound CAD didn't, so I got stopped out there. Pound Swiss, I'm long and holding long. I'm trying to get to 1.20. Pound Yen, if you're long, that was a huge run from 174 to 181. Wow. Again, don't be surprised if this stalls and finds some pockets. But again, trade that with confirmation on a smaller time frame. Pound New Zealand, we might end up taking a stab at this one if we hit the highs, tight stop loss, and see if we get this one to sell off. Otherwise, we wait for it to break below this monthly pivot, then look bearish on it with a stop loss above. But we'll keep an eye on that when the structure's cooperating. Pound US dollar, I would wait on this one. We kind of broke the highs. I don't like buying it here. New Zealand CAD, I'm long. There's a great pocket trade. I'm trying to get this one bigger picture. There's my swing. This is all correction. I'm looking for that trade. Back up to the highs or back up to an extension around 90. I think we can get up to 90, but we have to build down here. So that's New Zealand CAD. New Zealand Swiss, I'm still holding long. I'm going to hold long for some positive swap. New Zealand yen, we're back up to highs. This could be a good short opportunity with confirmation on a smaller time frame. New Zealand dollar, stay out of. Dollar CAD, we're back to 32. I'm long in this one, trying to get back to this yellow box in this big pocket. As long as we stay above 31.50, I'm going to stay in the trade. Dollar Swiss pulling back, but we'll see if this is a high or low. If this is a low to high, higher low to higher high, let's see if we can challenge this level, get back to this pivot. I'd like to see some Swiss weakness across the board. Traders know that. They've been with me the last couple of years, especially. It's one of my better technical basket trades is just against the Swiss. Dollar yen, don't fight it. Okay, dollar Sing 34.02. I'm still long on dollar Sing, trying to get to 37.50 or higher. It might pull back into this area. If it does, I'm still long, taking the same trade to 37.50. Okay, so that's all of our currency pairs. That's some stocks and options. We have some expirations this week. We'll start looking at some fresh positions. These are the stocks that I'm going to be looking for this week in class. And currencies, we'll take the best trades we can. If you have any questions, let me know. YouTube.com/Chris Pulver. I'll see you on Friday for a live session. We'll be live on Friday, 9:30 for opening bell, a little weekly recap. Happy trading, lots of profits. I'll see you soon. Thanks. Bye.